Despite the ongoing challenges arising from the COVID-19 pandemic, PIP had a good half year to 30th of November 2020. The company's portfolio is tilted towards more resilient industry sectors, such as information technology and healthcare, which demonstrated strong growth over the 6-month period. PIP's NAV per share grew by 8.9% in the half year, and net assets stood at £1.7 billion.
In line with the public markets, PIP's share price has rebounded strongly from the lows seen in March of last year and increased by 12.4% during the period. Along with the board, we continue to focus on trying to close the discount, which we believe is unmerited, given the high quality of PIP's portfolio, the access that it has via Pantheon's platform to many of the best private equity managers around the world, and its track record over 30 years and through several economic cycles.
PIP invests across the private equity spectrum, particularly emphasising small, mid-market buyouts and growth, where there are greater opportunities for value creation and more routes to exit. During the period, we saw strong performance from our underlying portfolio, with 15.4% growth prior to foreign exchange effects. This was propelled by some spirited valuation gains and a strong flow of exits, including some successful IPOs from our buyout and venture investments. The special situation segment was impacted by declines seen in the de-emphasised energy sector, which now represents just 4% of the portfolio. The strong overall performance demonstrates PIP's ability to access the rapid value creation that mainly occurs before private companies go public.
PIP's portfolio is diversified and provides exposure to many fast-growing companies in niche sectors that are not available via the public markets. For several years, PIP has been increasing its investments in sectors that are benefiting from major trends in business and consumer behaviour, such as digitalisation and the shift to online delivery of a range of products and services. PIP has also been investing in areas affected by demographic change, focusing on companies providing healthcare products and services. As you can see in this chart, almost half of PIP's portfolio is tilted towards information technology and healthcare, and these have held up well during the pandemic. Overall, PIP's portfolio is heavily weighted towards more resilient sectors, shown in this graphic. It's worth noting that PIP has very limited exposure to the sectors which have been hardest hit by the pandemic, and in fact, travel and hospitality, which includes restaurants and hotels, only account for 1.9% of the total. We've observed that the pandemic has accelerated many of the trends that were already there pre-crisis. For example, the move towards remote working and studying, e-commerce, digital payments, etc., and we expect this to continue. Please visit PIP's website for case studies on the different types of companies that PIP is invested in around the world.
Our stress testing has historically modelled for scenarios with declining distributions and a spike in calls. Due to our management of the portfolio and actions taken by our managers, this did not transpire. The portfolio has continued to distribute at healthy levels, with £111 million worth of distributions in the period, equivalent to a 15% distribution rate on an annualised basis, significantly above the levels observed in the last crisis. Calls amounted to £54 million, resulting in net cash flow of £57 million. We are actively managing the maturity of PIP's portfolio to ensure that it benefits from both the value creation and harvest phases within an investment's holding period. The cash position was robust at £151 million as at the period end, which, combined with the unused facility of £300 million in original capacity, along with the portfolio, provided a solid 4.4 times cover of our undrawn commitments. In November, we were able to extend the tenor for the majority of the facility commitments out to 2024. We have now agreed a further extension that ensures the entire facility term is extended to 2024. We saw a hiatus in deal flow immediately after the onset of the COVID-19 crisis, but the deal pipeline is now very full. Unlike some of the peers, PIP has been able to carry on investing through the pandemic. We committed £14.6 million to 6 new investments during the 6-month period, and since the period end, invested a further £29 million in 10 deals.
As we navigate our way through the COVID-19 crisis, the spotlight is on the response and behaviour of companies like never before. Sound ESG principles have been integrated into our investment processes for many years, all the way through the due diligence process before PIP makes an investment, right to the point when PIP exits. We have also long demonstrated our commitment to equal opportunity, diversity and inclusion. We use our relationships with the UNPRI and other organisations, as well as our position on over 470 fund advisory boards around the world, to promote high ESG standards amongst private equity managers and their investee companies. Watch our interviews, which are available on the PIP website, with two of our leading private equity managers to find out more about their approach to ESG, both within their own businesses and within their portfolio companies.
The private equity market is growing and is expected to double in size by 2025, while public markets continue to shrink in terms of the number of quoted companies. Businesses are increasingly turning to private markets, not only to source capital, but also to benefit from the hands-on expertise and networks of sophisticated private equity managers. Private equity is evolving with significant opportunities in co-investment and secondaries. The search for ever more sophisticated liquidity solutions has resulted in the growth in size and complexity of the secondary market. An experienced investor like Pantheon is well placed to take advantage of these opportunities on PIP's behalf. And PIP's flexible investment approach means it can increase and decrease its allocations to different deal types according to where it sees opportunities.
PIP's portfolio is truly global. Pantheon's investment team of over 100 experienced professionals are located all around the world. This means that through PIP, shareholders can access the exciting deal flow emanating out of the USA, which has the largest, most developed private equity market, as well as from Europe, Asia and the emerging markets.
PIP has been around for over 30 years and has managed through several previous crises. For just one share, PIP gives investors access to exciting, high-growth private companies globally and many of the best private equity managers who are capable of delivering returns in excess of the public markets. We see this clearly in PIP's portfolio. The weighted average revenue and EBITDA growth observed in our companies continue to exceed the growth rates that are seen amongst the companies that constitute the MSCI World Index. Overall, PIP has delivered 11.7% average annual NAV per share growth since inception. The company has significantly outperformed the MSCI World and FTSE All-Share over multiple periods and since 1987.
If you have any questions or would like more information on PIP, please visit the website, follow PIP on LinkedIn or contact the team here at Pantheon.